You know, I've spent my life in the market, watching it, breathing it, living it day in and day out, and if there's one truth I've come to understand, it's this: big profits don't come from complicated systems, they come from simple rules. Men ruin themselves by trying to outsmart the tape, by thinking they can invent a formula that will see what the market itself cannot. But the market knows. The market always knows, and it tells you plainly if you have the sense and patience to listen. Do you have that kind of patience? When I first started, I was just a boy scribbling down numbers on the board in the bucket shops. I wasn't wealthy, I wasn't educated, but I had eyes. I could see when stocks acted different from the rest. I noticed how a stock would refuse to go down on bad news or refuse to go up on good news. That told me something. That was my rule: the market itself gives you the tip. Now, how many men ignore that? They wait for tips from brokers, from friends, from the evening paper. They think somebody else has the key. But the key is right in front of them, if they would only look. Don't you think it's strange that so many people refuse to believe what they can see with their own eyes? I never needed a book of complicated theories. I needed one rule: follow the line of least resistance. A stock going up will continue up until it proves it won't. A stock going down will continue down until it proves it won't. That's all. It sounds too simple, doesn't it? But simplicity is the hardest thing for most men to accept. They want drama, they want a grand mystery. They want to believe there's some hidden wisdom that only the chosen few can understand. But I tell you, the truth is out in the open. Do you know why men won't take it? Because simplicity puts the responsibility on them. If the market is telling you what to do, then you have no excuse when you ignore it. That frightens men. They would rather blame a false tip or a bad broker or bad luck. They would rather believe the game is crooked than admit they themselves didn't follow the rule. Have you ever caught yourself making excuses instead of admitting you broke your own rule? I made fortunes not by being smarter than others, but by being more disciplined. The big money was not in the buying or the selling. It was in the waiting. Anybody can buy a stock. Anybody can sell a stock. But how many can sit tight while their profits grow? How many can resist the urge to snatch at small gains or to hold on too long when the market has turned? That's where men fail. They lack the nerve to sit still when the rule says sit still. They lack the nerve to cut loose when the rule says cut loose. Tell me honestly, haven't you seen yourself get nervous the moment your trade started to move in your favor? I'll tell you a story. Back in 1901, Union Pacific was the key to the market. I bought it at 162 and it climbed to 172, then 182, then 200. All the while I sat still. My friends thought I was mad. They kept telling me to take my profits. A profit isn't a profit until you take it, they said. But I knew better. The tape told me Union Pacific was still strong. The market was still with me. So I held and held until I made nearly $1 million. Now, what was the trick? There was no trick. Just a simple rule: never sell a stock that is acting right. Never hold a stock that is acting wrong. Does that sound like complicated science to you? And yet, most people will never follow it. They'll invent reasons, clever little excuses. They'll tell themselves it's oversold, it must bounce, or it's gone up too far, it must come down. The market doesn't care what they think. The market isn't there to please their logic. The market does what it wants, and it shows its hand in the action of prices. All you need to do is obey. But can you obey without letting your own vanity interfere? I've seen men blow up their fortunes because they thought they knew better than the market. They thought the rules didn't apply to them. They wanted to prove themselves right. The market doesn't pay for stubbornness, it punishes it. Big profits only come when you are humble enough to say, I don't know anything. The market knows everything. I will follow. Have you ever lost money just because you couldn't admit you were wrong? Now, don't mistake me. Following the simple rule doesn't mean there won't be losses. Losses are part of the game. You can't avoid them. What you can avoid is letting a small loss grow into a big one. That's the rule. Cut your losses quickly, without hesitation. Take them like a man. I always say, losing money is the least of your troubles. Losing your nerve is the worst. If you can keep your nerve and stick to your rule, the profits will come. Do you understand why most men fail here? They hate to be wrong. Their egos won't let them. They'd rather carry a stock down, 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 just so they don't have to admit they made a mistake. But the market doesn't care about their feelings. It will wipe them out without a second thought. The only way to survive is to obey your stop. That's your shield. That's your protection. Every great fortune in Wall Street was built by men who had the courage to take a small loss and the patience to sit with a big profit. Can you imagine how much easier the game would be if you simply stopped breaking that rule? You see, the big money isn't in being right all the time. It's in being right when it counts. If you cut your losses short, your wrong trades won't hurt you. And if you let your winners run, your right trades will more than make up for the rest. That's the simple arithmetic of speculation. Nothing mysterious about it. But you must stick to it. Do you think you can hold yourself steady enough to do that? I remember times when the whole market went against me. I was wrong, and I took my losses. Then I stepped back and waited, and when the market turned, I was there to ride it. That's another rule: wait for the right pitch. Don't swing at everything. You don't need to catch every move. You only need the big ones, the real swings. That's where the fortunes are made. Have you ever noticed how hard it is to do nothing while others are rushing about, trading in and out, busy as bees but making no honey? That's the hardest work of all, doing nothing when there is nothing to do. Men hate it. They crave action. They think the more trades they make, the more money they'll earn. But the market pays only for being right, not for being busy. I could sit for weeks, even months, waiting for the moment when the rule gave me the green light. And when it came, I struck with size. That's how you make the big profits. Do you have the self-control to wait that long? The rule is simple, but the discipline is not. That's where most men stumble. They want certainty. They want the market to tell them in advance what will happen. The market doesn't do that. It only gives hints, signs, tendencies. You must act on them without demanding a guarantee. You must have faith in the rule, because the rule is drawn from the nature of the market itself. Do you think you can trust the rule even when your nerves are screaming against it? I've seen the greatest bull markets and the greatest panics of my time. I've seen stocks soar to the sky and crash to the cellar. In every case, the same rule held true. Prices act before news. The tape is ahead of the crowd. The man who watches the tape and obeys it makes money. The man who waits for explanations, who wants to understand why, is always too late. Do you see how that works? When a stock refuses to go down in a weak market, that's strength. When it refuses to go up in a strong market, that's weakness. You don't need to know the reason. The reason will come out later, after the move is done. But by then, the easy money is gone. The public is always the last to know. The market itself is always first. If you learn to listen to it, you'll always be ahead. Isn't that what you want, to be ahead of the crowd? I tell you, men ruin themselves by thinking too much. They want to predict, to explain, to argue. I never argued with the market. I obeyed it. That was my only edge, and it was enough, because the market doesn't reward cleverness, it rewards obedience. That's the difference between the speculator who lasts and the gambler who goes broke. Are you willing to stop arguing with the market? Every fortune I made, every loss I took, came down to this one simple law: cut your losses, let your profits run, and never argue with the tape. Over and over again, it proved itself. Yet I broke it often enough to pay the price. Every time I thought I was smarter, every time I thought I could bend the rule, I paid for it in dollars and cents. You'll find the same. The rule doesn't bend for you, or for me, or for anyone. It stands firm, like a law of nature. Do you see why fighting it is suicide? Now, there are men who will hear me say this and nod their heads, but the next day, they'll go right back to their bad habits. They'll double down on a losing position. They'll sell out a winner because they're scared of losing their little gain. They'll chase every tip, every rumor. They'll do everything except follow the simple rule. And in the end, they'll blame the market for their ruin. But the market isn't to blame. The market only tells the truth. It's the man who refuses to listen who digs his own grave. Haven't you seen plenty of men do exactly that? If I could burn one lesson into your mind, it would be this: the big profits are in the big moves, and the big moves are caught by following the simple rule. Don't clutter it. Don't complicate it. Don't water it down with theories. Keep it plain, keep it strict, and it will serve you as it served me. But only if you have the nerve, the patience, and the humility to stick to it. Will you? When I tell you that the market itself gives the clearest signal, I mean just that. You don't need the newspapers, you don't need the brokers, and you don't need the chatter from men who think they're in the know. The market will always tip its hand if you're willing to watch closely enough. The problem is not that the signals aren't there. The problem is that most men refuse to believe what they see. They want the market to fit their own opinions, their own desires, their own hopes, and when it doesn't, they turn away from the truth that's right before their eyes. Have you ever caught yourself ignoring what the price was telling you because it didn't match what you wanted to believe? When I was just starting out in the bucket shops, I had nothing but the tape to rely on. I didn't have a grand theory, I didn't know the ins and outs of company reports, and I didn't have men whispering secrets in my ear. But I did have the numbers, the movement, the action of prices. I could see a stock trading heavy when it ought to be light, or light when it ought to be heavy. That told me everything I needed to know. The price action itself was the message. I didn't need to understand why a stock was strong in the face of selling pressure. I only needed to know that it was. Don't you think it's foolish when people throw away what the market shows them just because they can't explain it? There is a natural tendency in men to demand explanations. They want reasons. They want to know why a stock is going up or down before they act. But by the time the why becomes clear, the move is already well underway. The market doesn't wait for explanations. It moves first and lets the newspapers catch up later. That's why the signals from the market are more valuable than all the commentary in the world. A stock that refuses to drop on bad news is telling you something. A stock that refuses to rally on good news is telling you something. That kind of behavior doesn't lie. It's the purest truth there is in speculation. Do you see why waiting for an explanation is just another way of being late? I've seen it time and again. A stock will show strength while the general market is weak, and those who watch closely will notice it. They'll say to themselves, that stock is acting different. But then they second guess it. They tell themselves it must be some accident or some trick. They don't act because they don't trust what their eyes tell them. Then, weeks later, the news breaks out the company has earnings, or a deal, or some development, and the stock explodes higher. By then, the smart money is already in. The signals were there all along, but the public ignored them. Have you ever looked back and realized the market had been warning you, but you didn't listen? The market is like a man who doesn't speak with words, but with actions. His actions tell you everything if you're willing to watch. Think of it this way: if you throw a ball into the air, you don't need a professor to explain gravity to know it's going to come down. You see it with your own eyes? It's the same with stocks. If you see persistent buying that absorbs all the selling, that stock wants to go up. If you see persistent selling that shrugs off every bounce, that stock wants to go down. You don't need a reason, you just need to recognize the signal and act on it. Why do you think so many refuse to trust what's right in front of them? I can recall many instances in my own trading where the only edge I had was that I trusted the tape more than I trusted opinions. In 1907, during the Great Panic, stocks were falling apart left and right. Men were terrified, selling anything they owned just to raise cash, but even then, a few stocks showed resilience. They stopped going down before the rest of the market found its footing. That was the signal. Those stocks were stronger than the market, and when the panic ended, they were the first to rally. The market told me where to place my bets, and it was right. Isn't it remarkable how much you can know simply by watching what refuses to behave the way you'd expect? The danger comes when you try to force the market into your own logic. I've done it myself, and I've paid for it. A man wants to believe he's clever, that he can outthink the crowd. He reasons that because a stock has gone up too much, it must come down, or because it's fallen so far, it must bounce. But the market doesn't bend to his logic. The market shows its intention through its behavior, and if the behavior doesn't line up with your reasoning, it's your reasoning that's wrong. Can you swallow your pride enough to admit that? Signals in the market aren't complicated. They're plain as day if you have the nerve to look. It's just that people don't like the simplicity of it. They want confirmation, assurance, a safety net. They want to know the future before they risk their money. But speculation doesn't offer that. It offers you probabilities, hints, patterns of behavior. That's all you get, and it's all you need if you respect it. The stock that behaves with strength is sending you an invitation. The stock that behaves with weakness is sending you a warning. Do you ever notice how much easier trading feels when you simply follow those signs instead of trying to argue with them? The clearest signals are often the quietest ones. They don't come with fanfare or headlines. They come when the stock shrugs off a selling wave, or when it can't rally even with all the news in its favor. Those are the moments that matter. But men miss them, because they're too busy chasing tips or waiting for news. They want to be told what to do. They want someone else to take the responsibility. That's why they ignore the market's voice. It demands that they think for themselves, that they act without excuse. Are you willing to take that responsibility on your shoulders? The truth is, the market itself is the only reliable tipster. Every other source is suspect. A broker may have his own motives. A newspaper may be late. A friend may be misinformed. But the market is never misinformed about itself. Its signals are as close to certainty as you'll ever get in speculation. That's why I always trusted the tape above all else. Even when it went against my own opinions, I listened. And when I failed to listen, I paid dearly. Have you ever had the experience where the market was shouting at you and you chose not to hear it, only to regret it later? Big profits don't come from knowing everything. They come from catching the big moves, and the big moves are always foreshadowed in the way stocks act before the crowd catches on. That's the market's gift to you, the early signal. If you miss it, you'll end up chasing the move after it's already made, paying too much, taking too much risk. But if you catch it by trusting the signal, you can ride the wave from the beginning. Isn't that what every trader dreams of, to be there first, not last? I've said it before and I'll say it again, the market doesn't whisper. It speaks loud and clear. It tells you through price action whether a stock wants to go up or down. All you need is the courage to believe it over your own opinions, over the chatter, over the noise. That courage separates the speculator from the gambler, the man who profits from the man who perishes. Can you silence the noise long enough to hear the one voice that matters, the market itself? Discipline is worth more than cleverness, and I've learned that lesson the hard way, time and again. A man can be sharp as a tack, quick with numbers, fluent in theories, but if he hasn't the discipline to stick to his rules, the market will strip him bare. Cleverness might win you a round or two, but discipline wins the campaign. Have you ever noticed how many smart men you've seen go broke on Wall Street? They had brains enough to fill a room, but they couldn't master themselves. The truth is, the market doesn't care how clever you are. It doesn't care about your education, your background, or your ability to argue a point. It only rewards obedience to its law, and the law is simple: cut your losses, let your profits run, and never fight the tape. Discipline is what keeps you obeying that law when everything inside you wants to disobey it. Discipline is what saves you when cleverness tempts you into taking unnecessary chances. Haven't you ever felt the urge to show the market you were right, even when it was proving you wrong? Clever men fall into traps of their own making. They see a stock acting one way, but their brains tell them it ought to act another way, so they hold on, or they add to a losing position, or they try to be smarter than the tape. They think they can calculate their way out of a mistake. They spin clever explanations and reassure themselves with reasons. But the market doesn't listen to reasons. It listens only to discipline. A disciplined man cuts that position without delay and moves on. He doesn't need to prove himself right. He only needs to preserve his capital. Don't you think that's the harder thing to do, to take the small loss instead of chasing the clever idea? I've seen fortunes lost not because the men lacked brains, but because they lacked backbone. They had the information, they saw the signals, but they couldn't bring themselves to act when the time came. They hesitated, they second-guessed. They thought they were too smart to follow the simple rule. Discipline means doing the thing you hate, selling at a loss, sitting tight when your nerves scream at you, refusing to trade when there's nothing to do. Discipline is dull. It's thankless. But it's the difference between survival and ruin. Can you see how cleverness, without discipline, is just another form of vanity? When I made my biggest profits, it wasn't because I had figured out some secret the crowd didn't know. It was because I had the discipline to sit tight while others couldn't bear it. A stock would climb, and my friends would take their profits, patting themselves on the back for their cleverness. They'd walk away with a small gain, but the big move would still be ahead. I stayed in, not because I was clever, but because I was disciplined enough to obey my rule: never sell a stock that is acting right. That's all there was to it. Haven't you ever sold too soon and watched the move you wanted run away without you? Discipline is also what keeps a man out of the market when there's nothing to do. Cleverness urges him to find trades, to show off his skill, to be active for activity's sake. But discipline says no. Discipline says wait. Discipline says there are times to play and times to sit still, and the sitting still is often the hardest part of all. Men hate inactivity. They feel useless when they're not trading. But the market doesn't pay you for being busy. It pays you for being right. That's why discipline beats cleverness, because cleverness is restless, but discipline can wait. Do you have the patience to sit on your hands while everyone around you is buzzing with action? And think of this: cleverness often makes a man overconfident. He believes he's figured out the puzzle. He believes he sees what no one else does, and he stakes too much on it. He takes chances his discipline would never allow. When the trade goes wrong, as it often does, he finds himself trapped. Discipline, on the other hand, keeps a man cautious. It teaches him to protect himself, to take small risks, to guard his stake. Cleverness gambles. Discipline speculates. Can you see the difference in the outcome of those two paths? I'll give you an example. During one campaign, I watched a stock that was clearly under accumulation. The action was obvious to anyone who cared to look: steady buying, refusal to drop on weak days, tight trading ranges. My discipline told me to buy and hold. But I listened to some clever men who said it was overbought, that it had no right to be strong, that it was bound to fall back. Against my better judgment, I let their reasoning sway me. I sold out too soon. The stock doubled after I was gone. My cleverness cost me millions, but what really cost me was the lack of discipline to obey my own rule. Have you ever let someone else's clever arguments talk you out of your own conviction? Discipline is harder than cleverness because it requires humility. It requires you to admit that you don't know what will happen, that your only job is to follow the rule and protect yourself. Cleverness, on the other hand, feeds the ego. It makes you feel important, special, superior. But the market punishes ego. It humbles every man who thinks he can impose his will on it. Discipline strips away ego. It says, I will follow the tape, no matter what I think. That's why it's worth more than all the cleverness in the world. Isn't it true that most of the time you regret your lack of discipline more than your lack of ideas? The simple rule is enough for the disciplined man. He doesn't need to adorn it with fancy theories. He doesn't need to predict. He only needs to obey. And because he obeys, he lasts. He survives the bad breaks, he endures the mistakes, and he catches the big moves when they come. The clever man may win for a while, but sooner or later, his own vanity undoes him. He'll risk too much, he'll hold too long, he'll refuse to admit defeat, and the market will clean him out. I've seen it happen over and over. Have you? Every time I lost big, it wasn't because I wasn't clever enough. It was because I wasn't disciplined enough. I broke my own rule. I let my guard down. I let my emotions or my vanity lead me astray. The market punished me without mercy. And every time I made big money, it was because I had the discipline to do the hard thing, to wait, to cut losses, to sit tight, to follow the line of least resistance. Discipline is boring. Cleverness is exciting. But discipline pays, and cleverness bankrupts. Don't you think that's the hardest lesson for most men to learn? Obedience to the rule beats any prediction, and that is something every man who ever lasted in the market has had to learn. You can predict all you like, make charts and forecasts, gather every piece of information you think matters, but in the end the market will do what it wants to do. The man who clings to his prediction when the tape is proving him wrong is a man on the road to ruin. But the man who obeys the rule, even when it runs against his hopes or expectations, is the man who survives. Haven't you ever felt the sting of being right in theory but wrong in practice because you refused to obey what the market was telling you? I've made my share of predictions in my time. Sometimes they were right, sometimes they were wrong. But I can tell you this, my biggest profits didn't come from guessing what was going to happen. They came from obeying the rule when the market told me what was already happening. A rising stock that refuses to quit is telling you it wants to go higher. A falling stock that cannot find a bid is telling you it wants to go lower. That is reality, not prediction. The prediction comes from you, the obedience comes from the tape. Which one do you think pays better? Men love to predict. It feeds the ego. It makes them feel powerful, like they've mastered the future. They'll draw their lines on a chart. They'll study every scrap of news. They'll forecast earnings and dividends. But the market doesn't pay for being clever with forecasts. It pays for being obedient to action. A disciplined trader can be wrong in his guess, but right in his obedience, and still make money. The predictor can be right in his guess, but wrong in his obedience, and lose everything. Haven't you seen men cling to a correct forecast, only to go broke because they mistimed it or ignored the action in front of them? Let me give you an example. Back in one campaign, I believed the market as a whole was due for a rise. The news, the conditions, the sentiment, it all pointed to higher prices. But the action of the tape told me something else. Stocks were heavy, rallies were weak, volume dried up on advances and swelled on declines. The market was acting like it wanted to go down, prediction be damned. If I had clung to my forecast, I would have been buried. Instead, I obeyed the rule. I stepped aside, even took the short side, and it saved me. Isn't that the hardest thing, to set aside your belief and bow to the market's will? Predictions are like traps set by your own mind. They chain you to an opinion, and once you're chained, it becomes harder and harder to change course. You'll argue with yourself. You'll invent excuses to hold on. You'll fight the tape because you don't want to be wrong. But obedience frees you. It requires humility, yes, but it also keeps you flexible. If the rule says cut, you cut. If the rule says sit, you sit. If the rule says buy, you buy. No arguing, no second guessing, no predictions. Just obedience. Doesn't it sound simpler to let the market lead instead of trying to lead the market? I recall the Union Pacific campaign, when the stock showed strength day after day. There were plenty of clever men who predicted it had risen too far, too fast. They were sure it was due for a correction. They shorted it. They mocked those who stayed long. They argued from every angle. But the tape told a different story. Union Pacific was strong. It absorbed selling. It climbed steadily. I obeyed the tape. I stayed in. They lost their shirts, and I made a fortune. My prediction had nothing to do with it. My obedience had everything to do with it. Haven't you seen this play out, where the man who thinks too much loses to the man who simply follows? Another thing about predictions is that they lure you into overconfidence. If you believe you've foreseen the future, you'll take on more risk than you should. You'll stake more. You'll average down. You'll refuse to cut your losses because you're so certain you'll be proven right. That's how men go broke. Obedience, on the other hand, forces caution. It makes you cut when the rule says cut, even if you still believe you're right. It makes you wait when the tape says wait, even if your prediction urges you to act. And in the end, that caution is what saves your stake. Can you see how much safer obedience is than prediction? I've always said the market is never wrong, opinions often are. A prediction is nothing but an opinion dressed up as certainty, but the market's action is fact. If a stock is rising, it is rising. If it is falling, it is falling. That fact will make you money if you obey it, and ruin you if you try to fight it with your forecasts. How many times have you seen the market prove a man wrong long before he admits it? Obedience to the rule also keeps you patient. Prediction makes you restless, always looking ahead, always itching to act because you think you know what's coming. But obedience teaches you to wait until the signal is there. You don't jump in just because you predict a move, you wait until the tape confirms it. That waiting is hard. It goes against human nature, but it's where the real profits are. The predictor makes 10 trades, wrong on 7, barely right on 3. The obedient trader makes 3 trades, right on 2, and the profits dwarf the predictor's scraps. Haven't you ever realized you would have done better if you had traded less and waited more? Discipline and obedience are brothers. Prediction is their enemy. Let me tell you something straight, friend. In this business of speculation, the only thing that pays is catching the big swing. Not the little jiggles, not the daily noise, but the great, sweeping moves that carry prices far from where they started. That's where the money is. That's where the fortune is built. You might scalp a few points here and there. You might take satisfaction in being right 10 times in a row, but it won't mean a damn thing if you miss the one big move that would have made the year. Now ask yourself, are you in this game to keep busy, or are you in this game to make money? I've seen more men ruined by their own impatience than by the market itself. They'll catch a little turn, take their profit, pat themselves on the back, and then stand there watching while the real trend gathers steam and leaves them behind. Why? Because they can't sit still, because they confuse activity with profit. But the truth is, the market doesn't reward the restless, it rewards the patient observer who can tell the difference between noise and movement, between a twitch and a tide. Have you ever cut a profit short, only to see the market run exactly the way you first thought it would? Of course you have. We all have. And that's the greatest lesson right there. The trick isn't just finding a trend. The market will show you those if you learn how to watch it. The trick is staying with it once you've found it. That's the part most can't do. They're too eager, too afraid, too quick to cash in and call it a day. But this game isn't about taking profits, it's about taking the right profit. Do you understand the difference? It's the difference between a day's wages and a year's fortune. I learned a long time ago that the market doesn't care about me, or you, or anyone else. It will move the way it moves, regardless of our hopes, our opinions, or our fears. The only question is, do you move with it, or do you fight it? Most people fight. They argue with the tape. They say, it can't go any higher, or it can't go any lower, and yet it does, over and over again. The market is always right, and the only business we have is to get on the right side of it. Tell me, have you ever argued with the market and won? Now, you can't catch a big trend if you're trying to predict every little turn. The man who tries to pick tops and bottoms will end up with more scars than profits. That's the gambler's instinct, not the operator's method. I've lost enough money trying to be smart at the wrong time to know better. You don't need to buy the very bottom or sell the very top. You need to catch the middle, the fat, juicy part of the move. That's where the money is, so why waste your energy trying to be clever? Let me give you a picture. Imagine a train starting from the station. At first, it moves slow. It takes time to gather momentum. Then it begins to roll, faster and faster, until it's flying down the tracks. That's your trend. If you try to jump on while it's still pulling out, you risk slipping under the wheels. If you try to wait for the very end, you'll find the brakes applied and no motion left. But if you wait until it's clearly on its way, when the motion is smooth and the direction undeniable, that's when you climb aboard. Doesn't that make sense? The trouble with most traders is they want certainty. They want to know beforehand, without a doubt, what the market will do. But there is no certainty. There never will be. The best you can do is learn to recognize the signals when they appear, and then act decisively. The market gives you hints, not promises. It whispers if you listen, but it never shouts. And when you hesitate, when you wait for everything to be crystal clear, the move is half over. How many times have you waited for confirmation, only to find the profit already gone? I'll tell you something that may sound strange. It's not the buying or the selling that makes you money. It's the waiting. People don't believe me when I say that, but it's the truth. My biggest profits came not from the act of trading, but from sitting, from holding my position while the market did exactly what I thought it would do. It wasn't my cleverness that made me money, it was my patience. Can you sit still when you're right, or do you feel the itch to grab your winnings and run? That itch is the difference between a rich operator and a broke one. And let me remind you, markets don't move in a straight line. They'll advance, then pull back, then advance again. They'll shake out the timid, scare the weak, and test the strong. A man who doesn't understand this will sell at the first reaction, thinking the move is over, when it's only just begun. That's why you have to study the character of a trend, not just the price. You have to know what a healthy correction looks like and what a real reversal looks like. Do you know the difference, or do you jump at every shadow? I've seen operators make a good start, only to lose their nerve at the first setback. They say, "I'll get out now and buy back cheaper." But 9 times out of 10, the market doesn't give them the chance. It goes on without them, and they're left watching from the sidelines, sick at heart. That's why I always say it's not your brain that makes you money, it's your stomach. Can you stand the heat? Can you hold on when the market tests you? If you can't, you'll never catch a big trend, no matter how smart you are. There's another trap men fall into. They think they can catch every big move in every stock. But the truth is, you don't need many. 1 or 2 good ones a year, held properly, can make your whole fortune. The rest is noise. That's the beauty of this game. You don't have to be in every move. You just have to be in the right ones. So why spread yourself thin? Why chase every stock that twitches? Wouldn't it be better to wait for the perfect setup, the clear signal, and then drive it for all it's worth? And don't fool yourself into thinking you'll be right all the time. You won't. I've been wrong more times than I can count, but I learned to keep my losses small and let my profits grow large. That's the whole game, really. You can be wrong half the time and still make a fortune if your profits are big and your losses are small. Isn't that a comforting thought? That you don't have to be perfect, only disciplined. Let me tell you about human nature. Men are greedy when they should be fearful, and fearful when they should be greedy. They sell winners too soon and hold losers too long. That's why the market shakes them out time after time. But if you can reverse that instinct, if you can hold winners and cut losers, you've already put yourself ahead of 90% of the crowd. Think about it. When was the last time you held a stock long enough to see it multiply instead of just pocketing a quick profit? Another thing, never forget that trends are born out of conditions, not accidents. Prices don't rise without cause. They rise because the underlying forces are pushing them that way. Earnings, demand, money supply, speculation. Whatever the reason, the tape will show it. The tape is the only true judge. Men will argue opinions all day, but the tape never lies. Do you trust what you see, or do you listen to the chatter? I used to spend hours watching the ticker, just watching, not trading. I wanted to learn its language, its rhythm, its mood, and it spoke to me, not in words but in movements. That's how I knew when a stock was being accumulated, when it was being distributed, when the public was buying, and when the insiders were selling. That's how you catch a trend before the crowd sees it. Have you ever sat long enough with the market to hear its voice, or do you rush in and out, deaf to the music? When a trend begins, it doesn't look like much. Just a few moves, a little strength here, a little weakness there. But if you've trained your eye, you'll recognize it. You'll know this isn't just another fluctuation, it's the start of something bigger. That's when you step in. But you mustn't hesitate. The man who hesitates misses his chance, and once you're in, you must give the move room to develop. Don't smother it. Don't second-guess it. Just let it work. Do you have that kind of discipline? Now, here's where most men make their fatal mistake. They don't have a plan. They buy because they feel like buying. They sell because they feel like selling. But feelings don't pay in this game. Rules do. Methods do. You must know before you enter a trade how you'll act if it goes right, and how you'll act if it goes wrong. Otherwise, you'll be tossed around like a cork on the sea. Do you go into the market with a plan, or are you just hoping for luck? Let me pause here and ask you something. Do you really want to catch the big trends, or do you just want excitement? Because if it's excitement you're after, you'll find plenty of it in the daily ups and downs. But if it's money you're after, then you must resist the excitement. You must train yourself to be bored when nothing is happening, and patient when something is. Can you do that, or do you crave action too much? I'll tell you a story. Once I was long a stock, and it began to move exactly as I thought. It advanced steadily, with only minor setbacks. But I grew restless. I thought, surely it can't keep going like this. I'll take my profit now and buy back later. So I sold. And do you know what happened? The stock went on to double without me. Double? All because I couldn't sit still. That mistake cost me more than I care to remember. Have you ever done the same? The hardest thing in this game is not thinking, it's sitting. You can study, you can analyze, you can plan. But in the end, when you've taken your position, the real test begins. Can you sit and wait? Can you ignore the noise, the tips, the gossip, the fears? Most men can't. They talk themselves out of their own trades. They lose faith too soon. And so they miss the very thing they were looking for. Isn't that the cruelest trick of all? Now, don't mistake me. Sitting doesn't mean doing nothing. It means watching, studying, adjusting your judgment as the trend develops. It means being alert, not asleep. It means knowing when to add to your position and when to step aside. A big trend gives you many chances if you're paying attention. But you mustn't crowd it. You must let it breathe. Do you give your trades space to work? Or do you smother them with your meddling? Here's another truth: you don't catch big trends by following the crowd. The crowd is always late. By the time they see it, the best part of the move is already gone. If you're waiting for everyone to agree with you, you'll never make real money. You must learn to act when it feels uncomfortable, when the crowd disagrees. That's where the profit is. Are you willing to be alone in your judgment, or do you need the comfort of company? Big trends don't come every day. Sometimes you wait weeks, even months, for the right setup. That's when most traders lose heart. They get restless, they take second-rate trades just to feel busy, and they end up losing money. But the wise operator waits. He knows his opportunity will come, and when it does, he's ready. Have you ever waited so long that you talked yourself into a bad trade just to end the boredom? And when you do catch a big trend, you must ride it for all it's worth. Don't nibble. Don't take crumbs when a banquet is laid before you. Press your advantage. Pyramid your position carefully, add as the trend proves itself, and let the profits compound. This is how fortunes are made, not by jumping in and out, but by pressing when you're right. Do you build when you're right, or do you sell too soon and rob yourself of the real reward? The market, you see, is like a great ocean. The tides come in, the tides go out. You can't fight them, you can only ride them. A small wave won't carry you far, but a big tide can take you all the way to another shore. The question is, can you recognize the tide when it turns, and will you ride it until it ends? Most men jump off the boat halfway, afraid of a storm that never comes. Have you done that? Now let me make something plain. Catching big trends isn't about being smart. It's about being disciplined. It's about controlling yourself. The market is never your enemy. You are your own worst enemy. Your fear, your greed, your impatience. That's what ruins you. If you can master yourself, the market will take care of the rest. But can you do it? Can you stand aside from your own emotions and act only on the tape? There are times when the market practically begs you to take a position. The signs are so clear, so strong, that it would be foolish not to. But even then, you must size it properly, manage it properly, and sit properly. The opportunity is only the beginning. What you do with it is the real test. Do you treat opportunities like rare jewels, or do you squander them as if they come every day? Think back on your biggest winners. Didn't they all have the same quality? That feeling of inevitability, that momentum that seemed unstoppable. And think back on your biggest losses. Weren't they the ones where you forced it, where you tried to make the market move before it was ready? Doesn't that tell you something? The great moves announce themselves if you know how to listen. You don't have to guess. You don't have to force. You just have to watch, and wait, and then act when the time comes. That's all. It sounds simple, but it isn't easy. Most men can't wait. Most men can't listen. But if you can, the rewards are beyond imagination. And remember this, every big trend ends eventually. Nothing lasts forever. The same forces that drive prices up will, at some point, exhaust themselves. That's why you must watch as carefully at the end as at the beginning. The same patience that lets you hold must also let you exit. Too many men ride a trend up and then ride it all the way back down. They confuse stubbornness with discipline. Do you know when to get out, or do you cling too long? When I look back on my career, the profits I made came almost entirely from a handful of big moves. The rest were scratches, small wins, small losses, but those few big moves, they made everything else worthwhile. That's the nature of speculation. It's not a steady wage, it's a business of opportunities. You wait, you watch, you strike, and when you strike right, you ride it for all it's worth. Isn't that the kind of game you want to play? So, if you want to catch big trends, forget about trying to be busy. Forget about trying to be right all the time. Focus on being right big when you are right. Learn to wait, learn to watch, learn to hold. It's not glamorous, it's not exciting, but it's the only way I know to make real money in this business. You'll be tested every step of the way. Your nerves will be tested. Your patience will be tested. Your judgment will be tested. The market will do everything it can to shake you out. But if you can stand firm, if you can trust your method and sit through the storms, you'll come out richer than you ever imagined. And when you do, you'll realize it wasn't the market that made you rich. It was your own discipline, your own control, your own ability to catch and ride the big trends. Big money is made in the big swings, not the small fluctuations. That's the heart of speculation. The core truth that every operator has to learn if he wants to last in this business. It sounds simple, almost too simple, but most men never grasp it, not in practice. They spend their lives chasing nickels while the dollars pass them by. They're so eager to grab a quick profit that they miss the very move that could have made them rich. Have you ever looked back at a stock you sold too soon and said to yourself, if only I had held it, I'd be sitting on a fortune? Of course you have. We all have. That's the lesson right there. The small fluctuations aren't where the fortune lies. It's the big swing that pays. The trouble is, small fluctuations are tempting. They happen every day, every hour, and they lure the restless trader into action. Prices tick up, prices tick down, and the man watching the tape feels he must do something. He sees 2 points of profit and wants to grab them, afraid the market will take them away. But 2 points here and 3 points there won't make you rich. They'll just keep you busy. The man who tries to scalp every little move ends up tired, worn out, and poorer for the effort. The commissions alone will eat him alive, not to mention the mistakes that come from constant trading. Tell me, have you ever added up how much you've lost by being too active? Now, the market doesn't move in a straight line. It swings, it trends, it surges, and it retreats. Within that movement, there are small ripples and great waves. The ripples are the daily fluctuations. They're noisy, unpredictable, and mostly meaningless. The waves are the great swings. They start quietly, gather momentum, and then carry prices far from where they began. That's where the money is. A man who rides a wave can make more in a few months than another man makes in 10 years of chasing ripples. Which do you want to chase, ripples or waves? When I was a young boy watching the ticker, I made money quickly by catching little moves. I thought I was clever, and for a while I was. But when the market turned, I lost it all just as quickly. I didn't understand the real secret yet, that the small moves can be taken by anyone, but they don't last, and they don't pay. It wasn't until I learned to wait for the big swing, and to hold once I had it, that I began to make real money. Do you see the difference? One method keeps you busy, the other makes you rich. Think about it this way. If a stock moves from 50 to 200, there are men who will take a quick profit at 55, another at 60, another at 65. Each of them will be pleased with their little gains. But the man who holds through the whole move, the man who catches the big swing, walks away with the real fortune. The difference isn't in brains, it isn't in information, it's in patience, in the ability to sit through all the noise and wait for the true reward. Have you got that ability, or do you cut and run as soon as you see a few points of profit? Now, don't misunderstand me. There's nothing wrong with taking small profits if that's all you want. But if you're in this game for big money, if you want to do more than just scratch along, you have to aim higher. You can't let yourself be distracted by every little jiggle. The big swing is what matters, and the big swing only comes a few times a year. That's why patience is the hardest part of speculation. Most men can't wait. They'd rather be active, even if it means losing. They'd rather do something wrong than do nothing at all. Isn't that true of you, sometimes? I've said it before, and I'll say it again, the market is never wrong. Prices tell the story. When a stock begins to trend, when it starts to move with force, that's your cue. You don't need to predict the start, and you don't need to guess the end. You just need to recognize the movement and get in while it's clear. Then you hold. You don't let go for every minor reaction. You don't panic at the first dip. You sit, because you know the big money is coming in the big swing. Do you trust the tape enough to sit with it, or do you get shaken out by every little tremor? The difficulty lies in human nature. Men are wired to grab at profits and fear losses. When they see a little gain, they want to pocket it before it disappears. When they see a small loss, they hold on, hoping it will come back. That's exactly the opposite of what you must do. You must hold profits and cut losses. You must let the big swing work for you. But that goes against the grain of most men. That's why so few ever make real money in speculation. Are you willing to go against your own instincts, or will you follow the crowd into mediocrity? And here's the thing about the big swing, you don't need many of them. 1 or 2 a year, handled properly, can make your whole fortune. The rest of the time, you can afford to wait, to do nothing, to keep your powder dry. That's what separates the operator from the gambler. The gambler wants constant action, constant excitement. The operator wants profit, and he knows profit doesn't come every day. Have you ever asked yourself whether you're chasing action or chasing profit? Catching a big swing takes more than patience. It takes courage. When you see your stock move against you a little, when the market tests you with a reaction, do you have the nerve to hold? Or do you sell too soon, only to watch it take off without you? The market is designed to shake you out, to test your conviction. Only the strong hands hold through the storm. Only the strong hands ride the trend to its conclusion. That's why the big money goes to the few who can withstand the pressure. Can you? Think of the operators who made fortunes. They weren't the ones scalping for a point or two. They were the ones who caught great moves in the market, the great bull swings, the great bear swings, and held on. They didn't waste themselves on the daily ups and downs. They kept their eyes on the main chance, and when it came, they took it. That's the model you must follow. Not the quick, clever trades, but the long, patient ones. Which example will you follow, the gambler or the operator? And remember, a big swing isn't obvious at the start. It begins with small moves, small hints, just enough to suggest something bigger is coming. You have to watch, study, and learn to recognize the signs. The accumulation, the distribution, the steady pressure building. Once you see it, once you know it, then you act. But the action is only the beginning. The real profit comes afterward, in the holding, in the sitting. Have you trained yourself to recognize those signs, or are you still reacting to every jiggle on the tape? I'll tell you from my own scars, the biggest mistake I made in my early years was selling too soon. Time and again, I'd pick the right stock, I'd get in at the right time, and then I'd snatch a little profit and get out. And time and again, the stock would go on to make a great move without me. I was right in my judgment, but wrong in my action. I was thinking about fluctuations, not swings. That mistake cost me more than all my bad trades combined. Have you ever been right in theory but wrong in execution, simply because you couldn't hold? The truth is, you don't need to be clever. You don't need to predict. You just need to recognize when the market is in motion, when the swing has begun, and then sit tight. That's the hardest thing for a man to do, but it's the only thing that pays. Big money is made in the big swings, not the small fluctuations. That's not an opinion, it's a fact, carved into the experience of every operator who's ever lasted in this business. The question is, will you believe it, and more importantly, will you act on it? The real profit comes from sitting, not from trading often. That's the paradox of speculation, the thing that makes most men stumble before they even have a chance. They believe this is a business of constant action, that if they aren't buying or selling every day, they aren't doing their job. But the truth is the opposite. The hardest work in speculation is not in the thinking or the trading, it's in the waiting. The man who can wait, who can sit still when he's right, is the one who ends up with the profit. The man who can't sit ends up handing his gains back to the market. Haven't you ever seen a good position slip through your fingers because you just couldn't leave it alone? It's human nature to want to be busy. A man sitting with a position feels anxious, restless. He sees the market move a little against him, and he wants to act. He sees it hesitate, and he wants to grab what he has before it's gone. But this game doesn't reward fidgeting. It rewards patience. The tape doesn't move according to your nerves. It moves according to its own rhythm. The man who understands this learns to wait, to sit like a fisherman waiting for the big catch. He doesn't keep jerking his line every second. He knows the prize comes to the one who can hold steady. Do you treat your trades like a patient fisherman, or do you tug at them every chance you get? I made my first real money not by jumping in and out, but by sitting tight. I had seen the market break, I knew it was going lower, and I went short. Then came the real test, not the selling, but the sitting. The tape would rally, it would try to shake me out, it would whisper that maybe I was wrong. But I held, I sat, and the market proved me right in the end. That profit came not from the cleverness of my entry, but from the patience of my holding. Isn't that what most traders miss, that the act of buying or selling is just the beginning, not the end? Now, most men confuse activity with profit. They think that by doing something, by trading constantly, they're advancing. But all they're really doing is wearing themselves out. Commissions, mistakes, false moves, they eat up the small gains and leave nothing at the end. The man who trades often may look busy, but his account tells the truth. Meanwhile, the man who sits still, who holds his position while the market moves, sees his profit grow without lifting a finger. Which do you think pays better, endless effort or patient stillness? It's easy to say sit tight, but it's the hardest thing to do in practice. Your nerves fight you every day. The papers scream news, the brokers whisper tips, the crowd talks excitement. Every little fluctuation seems like a signal to act. You tell yourself, I'll take this profit now and buy back later. And maybe once or twice you succeed, but 9 times out of 10 you don't. The market doesn't give you the chance. It goes on without you, leaving you stranded with a small gain while the real fortune slips away. Have you ever cashed in too early only to watch the market keep moving exactly as you thought it would? The essence of speculation is this: profits take time to grow. A stock doesn't double overnight. A trend doesn't play out in a day. It takes weeks, months, sometimes longer. If you don't have the patience to let your profit ripen, you'll never taste the full fruit. You'll always be nibbling at the green, unripe parts. The real sweetness comes to the man who waits. Do you let your trades ripen, or do you pluck them the moment they show color? Men say to me, but Jesse, what if I lose my profit while I'm waiting? My answer is always the same: if you're on the right side, sitting will pay you more than grabbing. The small setbacks, the reactions, the corrections, those are part of the journey. They're the market's way of shaking out the weak hands. If you let yourself be shaken out, you'll never see the real move. The only protection you need is a stop to guard against being wrong in the first place. Once you're right, your job is to sit. Can you trust your judgment long enough to sit, or do you let every tick scare you out? It's important to remember that sitting doesn't mean doing nothing at all. It means doing the hardest kind of work, the work of restraint. It means sitting through fear, sitting through doubt, sitting through the market's tricks and feints. It means resisting the urge to meddle, to interfere, to grab at crumbs when a banquet is coming. That's not laziness, that's discipline of the highest order. Isn't it strange how the hardest work in this game looks like idleness to the untrained eye? Think about the difference between a gambler and an operator. The gambler must always be in action. He can't sit. The wheel must be spinning, the dice must be rolling, or he feels empty. He confuses action with progress. The operator, on the other hand, knows that the money comes not from constant motion, but from waiting for the right moment and then holding. That's why the gambler always loses in the long run, and the operator, if he can control himself, wins. Which one do you resemble when you're in the market, the restless gambler or the disciplined operator? I remember once, in a bull market, I bought stocks that were clearly in a strong uptrend. They went higher, then corrected, then went higher again. Every correction made me want to sell. Every dip tested my resolve. But I reminded myself that the real profit wasn't in taking a few points. It was in sitting for the whole swing. I held on, and the stocks doubled. If I had sold at the first sign of profit, I would have walked away with crumbs instead of the feast. Haven't you had that same experience? Watching your stock run after you've sold it too soon. The crowd never learns this lesson. They will always sell too soon and buy too late. They'll jump in after the move is obvious, then sell at the first sign of trouble. They're forever in and out, forever restless, forever chasing. That's why the crowd loses, and why the disciplined few win. The market was built to punish impatience and reward patience. If you understand that, you're already ahead of most men.